In the later chapters of Pacioli's books, he begins dealing with other topics in financial processes. He deals with partnership accounts and partnership accounting. He deals with sole traders, expenses, and the concept of petty cash in the ledger, and where you might lump expenses together so that they're more controllable and don't add a lot of detail that's not necessary. He also talks about year-end changes when you need to open up a new book, and if you are going to use books over a year-end, how you do that. Talks about producing statements and notes that you have to be very careful as you produce customer and vendor statements, because the copies that you make and hand to them will be compared to their own books, just like we talked about in the blockchain video. He talks about error correction, noting that you should never erase, but rather you enter new entries to reflect what should have been done. In the final chapters, he begins to get into balancing and closing the book. As he does this in chapter 32, it's interesting to me to note when this closing and connected operation take place, the event is known as balancing the books. The process then he describes is needing to have an assistant to work with you. The assistant is going through the journals for the year, calling out every journal, and you are going through the ledger, finding every one of those journal entries. Effectively, you're rebuilding the ledger from scratch. So you effectively, through this closing process, are rechecking that all of the balances have been produced in the right way and that everything has been posted and added up correctly. In chapter 33, the closing procedure, he notes that all of this work should be done in a single day, and you don't want to make any new transactions. You have to have a cutoff between time periods. In 34, he's talking about the closing procedure. Here's where he starts to talk about the trial balance. He begins by noting the difference between P&L accounts and balance sheet accounts. The balance sheet accounts get transferred forward, but P&L accounts get transferred to the profit and loss account, where you determine whether you had an income or a loss for the year, and then are transferred into owner's equity. So he makes that whole process clear, and then he says when it is closed, as with other accounts, the balance is transferred from the old ledger to the new ledger. At this time, it is customary to make a list of balances transferred. Then you, as the owner, get a complete picture of your business. Effectively, that small paragraph right there is talking about the whole process of making financial statements, and the trial balance was basically the original financial statements. He notes that then to make everything really clear, as noted, you will record on one sheet of paper all the balance items from the ledger and summarize them, making a single total of all the debit items and a single total of all the credit items, and the total will balance. When the totals do not balance, an error has been made in the ledger. Then you must use the talent God has given you and your reasoning skills that you learned to find the error. Otherwise, as we've said from the start of the book, you will not have the skill to manage your business. His closing statement is one that I like here. After telling us about becoming excellent bookkeepers, saying, "Now I have provided a full description for you of the way to become a good accountant. This excellent text includes all the rules of accounting in their appropriate place," and then he concludes, "Now, please remember to pray to God for me, too, so that I may continue to improve my work to His praise and glory."